you don't have a banking sector and you can't borrow money to start a business or buy a car or buy a house, the people in those countries are going to be poor. If we're able to build a banking system with Bitcoin as the foundation and people can borrow and lend and access financial services in a technologically efficient way, it's going to unlock a massive shift in human productivity.
Ha érdekel a befektetés világa, érdemes lehet megismerkedned a Bitcoinnal. Ami igazán kényelmes, hogy teljesen magyar nyelvű, a regisztráció gyors, és pár perc alatt el tudod kezdeni a befektetést. A Bitcoinnal nem csak kriptókat vehetsz, hanem részvényeket, ETF-eket és nemesfémeket is, így könnyen diversifikálhatod a befektetési portfóliód. A rendszeres automatizált vásárlást támogató DCA funkció és a Bitcoin Earn a passzív hozamhoz ad extra lehetőségeket is. Ráadásul a Bitcoin kártya segítségével a befektetéseid a mindennapokban is használhatod kártyás fizetéskor. A podcast alatti leírásban megtalálod a linkünket, amin keresztül regisztrálva a csatornát is támogatni tudod egy kávé árával. Hi Kevin, welcome to the podcast.
Nice to meet you, Barbara.
So our usual question is like, what was your orange pill moment? So how did you first meet with Bitcoin?
It's a good question. I was kind of aware of Bitcoin from working in the foreign exchange world for years, from kind of early 2010s. I didn't really get orange pilled until the introduction of the ETF. And so I was looking at Bitcoin more from a portfolio perspective and having trouble finding any stocks that, I would say met my value criteria. Seeing a lot of tech stocks trade at ridiculous valuations that made them unattractive as investments. And when I really started investigating Bitcoin, it made a lot of sense to me that people should look at this new asset and new asset class and its role in portfolios going forward. So for me, that was really the orange pilling moment. And, I would say since then, there's been, additional orange pilling moments where you realize, different things here and there about Bitcoin.
How did the idea of Cadena first come to your mind?
Yeah, so I moved to Costa Rica about 3 years ago, which was about the time the ETF was introduced. And so this all kind of came together at the same time. I owned a mortgage brokerage in Canada. And being in Costa Rica, there was a residency requirement to be a Canadian resident to continue with that business. And so I was looking at alternatives, and I was also in the process of building a house. And so I needed to borrow money, and I had two assets, which were Bitcoin and a house. And borrowing against a house in Costa Rica is very expensive for foreigners. And borrowing against Bitcoin, I was really surprised that all of the solutions involved sending your keys to a trusted third party. I really thought that the point of Bitcoin was to eliminate these centralization and trusted third parties. So from there, I went pretty deep into a rabbit hole from smart contracts, reading a lot of what Nick Szabo had written. And with my experience as a mortgage broker, my business was primarily helping real estate investors save taxes. But there was a portion of the business that was really, I'll call hard money lending, where people who don't have the income or credit to support a mortgage were able to get a mortgage purely based on the value of the house. And it seemed to me, there was a lot of paperwork still involved in that process, gathering, ID, income, assets and liability documents, credit score, appraising the house, all this stuff. And that it could be done much easier using Bitcoin as the unit of collateral. And so then I started a journey of trying to find programmers who could build what we were talking about and understanding how it would work on the Bitcoin blockchain. And then I found some wonderful Hungarian programmers who were able to help me that I think you know.
So, who's your ideal user today? How can we imagine this? Someone, obviously, who holds Bitcoin and don't want to sell it, possibly. But can I borrow, any amount of money against my Bitcoin?
Yeah. So, right now we're going through a bit of a revamp, and I would say, the users that we have, I would say are early adopters to new technology and, Bitcoin holders, Bitcoin OGs, and people who are interested in seeing Bitcoin evolve in additional use cases. And I think, as we add users, it will, I look at the existing custodied business model, and there's, 20, 30, 40 billion dollars that are being used as collateral in these systems. And, I think the market is missing a big piece of this. When you get a mortgage on your house, you're not giving somebody your house and the use of your house. And so to me, it was really strange that people would be sending their Bitcoin to a third party. And there's a cost to doing that I don't think people truly understand. And that cost is the counterparty risk that they have when they send their keys to a third party. And looking at the history in the space, there's been all kinds of issues with, custodial failures. And so you can look at the history and you can see that, there's a non-zero chance that you're going to lose your coins with this centralized third party. And so, depending on the credit risk you're taking with that counterparty, you need to make an adjustment to the interest rate you're paying to account for the credit risk that you're taking. And so, I think for us, it's really just a matter of communicating the model. And, I think over time, we'll see that counterparty risk continues to be a big deal and, continues to be the reason that Bitcoin emerged as a technology. And so, whether it's custodial failures that, drive a huge round of growth for us, or people begin to realize that the existing banking system might not be on such a solid foundation. I think Bitcoin really provides the opportunity for, not just portfolio diversification, but diversification in terms of how things are custodied. This is something that people can't take away from you, which I think is the unique property of self-custody and Bitcoin. And to me, those two things go together. And obviously, I'll stop talking now, but, I would say 2025, we've seen, huge growth in the institutional world. Obviously, strategies, preferred shares, and raising capital, additional flows going into the ETF, into, essentially what are these Bitcoin derivatives, and not Bitcoin itself. And so, I think the market can go one way for a while and then come back. And I realize this is kind of against the grain, given the institutional adoption and, normalization, I'll say, of paper Bitcoin. But, eventually, people understand the difference between paper Bitcoin and real Bitcoin.
So yeah, I mean, like regarding custody, not your keys, not your coins. So that's like a staple saying that that we've been using in the space for such a long time, especially because some of us has experienced how these like centralized exchanges collapsed and they basically like got away with our money. So yeah, Bitcoin and the idea of Bitcoin is like taking away the power from these centralized apps or banks or exchanges. So I wonder how like Cadena makes this like borrowing transaction happen, or like could you please walk us through step by step like what is happening if I'm borrowing against my Bitcoins?
Yeah, of course. So it's a peer-to-peer platform where we're matching borrowers and lenders. And so the lenders are looking for fixed fiat yield and are essentially trading the volatility, the upside and the downside of their Bitcoin for a fixed fiat yield. The borrower in our market is borrowing leveraged Bitcoin exposure. And so they're increasing the amount of Bitcoin they effectively hold, which from a loan perspective, if they want to buy a boat or start a business or use fiat, because they've increased their exposure to Bitcoin, they have Bitcoin that they can sell and maintain that same exposure. In terms of the self-custody piece, so the clients meet in a marketplace, which is at cadenabitcoin.com. One of the changes we're doing now, which hopefully is live by the time this podcast is previously we have all the denominations in Bitcoin amounts. So we had 0.01 Bitcoin contract size, 0.1 Bitcoin, and 1 Bitcoin contract size. And I think the feedback from consumers has been that it would be helpful to have a US dollar amount. And so what we're going to be doing is changing it to be $1,000, $10,000, and $100,000 loans. And then people will be able to get loans of any denomination. But again, the transactions are executed through the website. And then we've built a signer app, which allows the transactions to be signed. So the first time you log into the app, it's an open source app, and we're working with other wallets to potentially integrate this technology. And what it does is it stores your private. So the first time you log in, it can create a 12-word seed phrase for you. You can create your own 12-word seed phrase using Entropy, or you can connect any 12-word seed phrase wallet to Cadena. And once you have, we have an email address, a password, this 12-word seed phrase. And once the account's funded, then you can sign these transactions. And so what we get at the back end is the signature information, but we don't get the 12 words. We get to know that you can sign the transactions. And so it's full self-custody, throughout the process. Cadena is never in control of your keys or your coins. You're always in control throughout this process. There is a period of time. And so what the technology we're using is smart contracts built directly on Bitcoin. And so for a period of time, the collateral is locked in this smart contract for the length of the contract. I apologize for the dog.
It's okay. Okay, so and is the percentage of the loan or the interest rate is also like a fixed rate in the contract?
Yeah, so it's a fixed rate that's agreed to with the borrower and the lender. And typically the rates we've seen transact in the marketplace today have all really been between about 10 and 12%. And so lenders earning fixed returns secured by Bitcoin collateral of 10 to 12%. And the borrowers are paying 10 to 12% for that leveraged Bitcoin exposure. And so, hard to imagine what will happen with rates in the future, but I would expect them to go down over time as additional capital gets attracted to, a 10 or 12% yield. And I saw one of the questions earlier, Barbara, you'd meant is the yield sustainable? And absolutely it's sustainable. It's peers meeting in a marketplace and determining where they're going to transact. It's a free market. And so as long as people are looking to borrow Bitcoin, there'll be an opportunity for people to lend and earn this fixed fiat return. And I should just point out that the return isn't without risk. So the collateral is all locked in a smart contract for the length of the loan. And the lender, I would think about it this way, the lender is being paid back first from this collateral pool. And so using round numbers, if we have $100,000 Bitcoin price and the lender and borrower are both putting in collateral equal to, $100,000 in this case, if Bitcoin were to fall to $50,000, the lender would receive all the collateral at the end of the contract. If Bitcoin were to fall to $25,000, the lender may still be expecting to receive $50,000 on final settlement, but the collateral is only worth $25,000 at that point. And so there is some risk to the lender if Bitcoin were to fall by 50%. And so that's a risk that lenders need to be aware of. I would say separately, they could hedge that exposure by buying a put option on IBIT or some other Bitcoin proxy to hedge that risk. And, that may cost them 2 to 3% a year. But still, they would be earning at that point 8 or 9%, what I would call risk-free return, where smart contract risk has essentially replaced the sovereign risk that people are taking by investing in treasury bills and other sovereign debt instruments today. So what I see is this becoming, eventually getting to a point where we can create curve on Bitcoin, a risk-free interest rate curve, which I think is going to be really helpful to growing the Bitcoin economy.
Back in the days, when I started to work with Bitcoin, we also did some peer-to-peer lending, not in Bitcoin, but in fiat in general. And those platforms were mainly like dividing the loans into like smaller packages and then repackage them in repackage them together, so you could like actually like buy into like medium risk kind of assets with 200 loans in it, and then in each loan you would have like, for example, I don't know, like £1 each, and it would mitigate the risk of like the borrower not paying it back. Have you ever thought about implementing something like that, or would it be too complex to solve with a smart contract?
I'm not sure I understood the question, Barbara.
So like these peer-to-peer lendings like Bondora, or I'm not sure like what was the names that we were using, but you could buy into a loan, but it was actually a package of loans. So you would like lend £100, and then that £100 would go into 100 different loans, and then you would give each loan £1 each. And then if 20% of the loans were never paid back, then you would still be good for 80% of the whole package, if that makes
Yeah,
sense.
I think where our model is a bit different is the loan is fully collateralized at the beginning. So both the borrower and the lender are contributing collateral to the loan. And that collateral is going to make sure in 99% of cases that the lender is going to be repaid. And then the borrower is going to get whatever remains after the lender has been repaid. And so there's no, I think, worry within our system that the lender isn't going to be repaid. It's fully secured. They're going to receive all the collateral, um, and they are exposed to this market risk if Bitcoin were to fall by more than 50%. That would be the risk they're taking. They're not taking risk of not being able to get the collateral back. It's locked in by math.
Okay, so like the biggest risk is basically like Bitcoin's volatility.
Yeah, I'd say, the volatility doesn't really impact. And so I'll just maybe go through an example in terms of comparing our platform to other platforms. And so when Bitcoin's price falls on an existing custody platform, a lot of the clients will get margin calls because they're required to have, a certain amount of collateral to support their loan. And if the value of their Bitcoin collateral falls, they need to top that up. And so that call is coming at the worst possible time for anybody who's receiving it because their collateral is down. Maybe they have more Bitcoin to add as collateral, but that's also down in value. And so, what the margin call and liquidation process leads to is a bunch of forced selling at the lows. And so I don't think that's, helpful to market stability or market structure. And you can see it, right? When things are low, there's continued selling. With our model, it really depends on Bitcoin's price at the beginning and at the end of the contract. Those are the only 2 points that matter. Any volatility, over the course of the contract isn't going to affect the settlement. It may affect, how the borrower and lender feel about the contract, but the final settlement is going to be determined by the price at the end of the contract. So in the example we were talking about, if Bitcoin's price went from $100,000 down to $25,000 and back up to $75,000 by the end of the contract, it's going to settle based on the $75,000 price. The user would have never received a margin call when it went to 25,000 or 50,000. I think that's more in line with a loan. It's similar, again, to a mortgage on a house where, you're borrowing money, it's secured by the house, but, if the value of the house falls below the value of the mortgage, you're just giving the keys back to the lender, and it's their risk. And so it's that type of model, essentially a mortgage on your Bitcoin.
Mhm. Okay, now I think I understand it more clearly. To be honest, thank you so much for the example. In this case, if I understood it correctly, then it works to actually make sure that we are using longer contracts, especially in a bear market, because then it can possibly like survive this whole crypto winter that we are going through, or we're gonna go through in the next 1 or 2 years.
Yeah, I think I'll add to this, Barbara. I'm sorry to interrupt you, but you're making me think about all these things that are coming. And so, we've done a lot of work with people in the mining space, and a lot of times mining rigs, the financing is over 3 years. And so we're looking at longer term loans to support that because, although there is no margin call, if they got a 1 year loan and Bitcoin's price was down, it may be hard to refinance that for years 2 and 3. And so we're looking at some longer term options. We also have interest from people who have Bitcoin and would use that Bitcoin to uh, as collateral to borrow and then use cash to borrow it, buy a house. And so having a 1 year loan that resets every year might not be ideal. So looking to see if we can get even longer and 5 year loans. And so now it's, for me, a matter of connecting these pools of capital to the end users who are looking for leveraged Bitcoin exposure.
So I can use my Bitcoin now and then possibly borrow for like 10, 20 years as well. Is it possible to you?
Well, currently we have a 1 month, a 3 months, a 6 month, and 1 year product.
Oh, okay,
The
okay.
plan is to simplify everything down to a 1 year product and then potentially offer bespoke solutions to miners and real estate when we have capital who's looking to lend for a longer term.
Okay, yeah.
But we found the demand mostly to be in 1 year area. And I think that's kind of the area that people are familiar with in the space and dealing with custodied lenders and also familiar in dealing with dollar amounts. So we're just making some changes to the front end to accommodate this.
No, because just I was just thinking if I want to buy a house and then that's probably going to be bigger chunk of money than one would want to pay back in a year or so. But that's I'm not saying it's not possible, but in case
Yes.
that's
Yeah. I mean, I think for me, Barbara, the thing that excites me about this technology is, there's ways to do things in terms of structure it like a mortgage, where it's payments over 5 years, or, there's a lot of alternatives and options that are available. And so right now we have kind of this one year bullet loan, but we can certainly add terms, we can add payments, but really just trying to, at this point, find product market fit for a one loan. And I definitely get the feedback from the community that this is something that they've really been looking for. And I think, again, just making some changes to communicate the value and dollar amounts more clearly is going to be helpful to the market.
Tudtad, hogy a Bitcoin bázisnak van egy saját webshopja is? Na ott tényleg minden megtalálható, ami egy bitcoinernek vagy kriptorajongónak kellhet. Hardware tárcák, könyvek, kiegészítők, meg persze néhány menü ajándék is. Nálunk nem csak forinttal, hanem bitcoinnal és altcoinokkal is fizethetsz teljesen biztonságosan. Ráadásul, ha bitcoinnal fizetsz, automatikusan 10% kedvezményt kapsz. Szóval, ha legközelebb hardware tárcát keresel, vagy meglepnél magad valami kriptós cuccal, nézd be a bitcoinbázis.hu/shop oldalra, mert így nem csak magadnak, hanem a podcastnak is segítesz. So, how does Cadena is influenced by the regulations or the tightening regulatory environment at the moment?
So Cadena Bitcoin is a regulated business. We're a registered Bitcoin service provider in El Salvador. And the platform is Bitcoin in, Bitcoin out. And so when the transactions are funded, we're taking UTXOs from the borrower and the lender. And at the end, we're distributing those UTXOs back to the borrower and the lender. And so within El Salvador's regulatory framework, we're able to do this with no KYC. And it's because if there were fiat on ramps and off ramps, the KYC process would happen there. And so we're also having discussions with partners to integrate fiat on and off ramps into the Cadena platform. Those would be KYC'd partners, and so there would be a KYC process within each of those partners to do that. We've also explored adding stablecoin on and off ramps. For us, that requires another regulatory license in order to do that. I think, you know, I'll just say regular monthly reporting, compliance officer, unusual transaction handling, and I think the regulation is important, obviously, to protect the market. So we just, we found El Salvador to be very reasonable, and having the license there allows us to operate. And, if there's other people in the world who would like to use the service and they want to comply with their local laws and regulations, they are certainly more than welcome to. So we're able to offer this globally, except for China, where they don't allow cryptocurrency transactions. And I think it's pretty interesting where we'll see where the regulation is headed. And I think for a company like ours, where we have clients in many different places, some of the reasons that people would use the lending platform or borrowing platform is to not sell their Bitcoin and have this tax event, and I just, there's so many different jurisdictions, some with no tax, some with little tax, some with, all kinds of different rules that, like, we're building a business that is a service to people, and hopefully they can find value in that service. But it's not, it's done first for the users and within the regulatory framework that we need to operate.
Yeah, I was just asking because in Hungary there is like a tighter regulatory environment at the moment. So if our viewers want to use your services, then they should actually like look into this if the validator needs to be involved in this transaction as well or not. So that's just a heads up, guys, to our viewers to
Yeah, and I
actually.
would say that with anybody, and as there's some interesting tax rules now because, realized gains or losses, according to tax laws, occur when possession of the Bitcoin changes. So when you're sending your coins to a third party, as far as Bitcoin's concerned, you've sold them, but according to the IRS, you're now in this loan. So I think there's a lot of changes and a lot of clarification and a lot of things coming. And so, I don't think it makes sense to put the regulatory cart before the horse, but to, kind of have an idea where things are going. And there's so many different jurisdictions. You bring up kind of tighter regulatory aspects. And I find it really interesting because a lot of, I'm Canadian. The Canadian partners we have, I think, all have trouble with banking and, getting bank accounts, just basic services, and discrimination because they work in the Bitcoin field. We have some partners in El Salvador, and kind of counterintuitively, they're running into some similar issues where the banking sector isn't necessarily as receptive to the Bitcoin economy as one would hope. And, I think it is what it is today, but I think we'll see market share quickly going from one to the other when people realize, how important and helpful this technology can be to, making their lives easier. I'm doing things now, we have employees throughout the world. You're able to send them money in 10 minutes. With the legacy banking system, it's questionable whether I could even send them money at all. So it's, like eventually, whether it's the number go up technology, the fact that the technology is much easier to use. And I think, to me, this is really the interesting piece where builders get to turn Bitcoin into something that is more usable. I talk about this with my son, who kind of helped with the front end. But I think there is a missing piece for a lot of people. Like, you want Bitcoin to get to the point where my 80-year-old mother can use it and interact with it the same way she can with banking. And I don't think we're there yet, but I don't think we're that far off either with the innovation that's going on in the space.
Yeah, the thing is that it's very interesting how like banks haven't really changed their point of view on Bitcoin in the past 10 years. I mean, I started working in crypto in 2017. And then in 2017, they were already like threatening us, and then they closed the bank accounts. And every month we had to go and open a new bank account with a new bank and go through the KYC and explain to them that we are not drug dealers and all these things. And yet here I am in 2026, and we still do this. So it's like
Yeah.
it
But I
hasn't really
think, but I
changed.
think in 2011 it would have been extremely hard to live without, banking. Whereas today it's not quite as hard. Like, there's a few tools that exist, and a lot of tools coming that I think are frankly going to make it easier. And I think that will facilitate, a transition from banking. And again, I'll come back to the point that I keep trying to bring up is I think there's a tremendous amount of risk in the banking system itself. And they are, I kind of like totally dependent. It's one system. So if one counterparty fails, essentially it sucks them all down. And, if it wasn't for government bailouts, a lot of the banks would be in a very, very different situation today. And I think the way they run their business is, you know, how you run a business when you have an implicit government bailout. And at this point, with the sitting US president who couldn't get a bank account either, I don't know, and alternatives available for people to access financial services much more efficiently than through banks. I don't know that the political will or the money exists to bail out the banks again. And so when they fail, which they definitely will, I think people are going to realize that counterparty risk is a very real thing. And that, like in Canada, they have this, and I know they have something in the States as well, where it's like deposit protection. Anyway, if you go through they might be able to protect a couple $1 billion of deposits with those schemes, but they're, they're certainly not going to keep everybody whole in the event of some type of event like we saw in 2008. And, again, I think you started to see it in 2021, and regulators will rush in to put the fires out, and because they have to, because otherwise the system just gets sucked down a black hole, right? And everybody loses their money. And again, it's all based on this idea that we can just constantly print money, and I don't know, the system perpetuates itself. I'll stop now.
No, 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 no! Don't stop. Like I'm interested in your story actually, because I wanted to ask, like, do you think it's possible it's gonna happen in the next couple of years? Especially like we've been only 2 months into this year, but it's already like so many crazy things are happening, and then we are potentially heading towards another world war, and all these like crazy things where like usually during wars money tends to go through hyperinflation, and then we already experienced the hyperinflation in general. So I'm not sure where we're gonna end up in a couple of months or in a year time. So yeah, it's if you have
Yeah, I
any
mean,
thoughts.
it's interesting times. I think, like, back to my orange pilling story, I thought um, Bitcoin would do extremely well in an environment where rates fell. And I still think that's the case, but I would have expected that to happen much sooner than it did. I think it's still going to happen, but I would have expected it to happen a bit sooner. I think the key thing for me is that, like, the bond markets are now kind of sniffing around and realizing, wait a second, this money isn't going to be paid back. And we've been the government of Canada could borrow money at below 1% during COVID. And that's not the case anymore. And so when you're paying 3% to borrow money, the economics change a bit. And, if you look at the Japanese bond market, I think people realize that they're taking a bit more risk and needing to earn some return for that risk. And so that's why you're seeing this volatility and yields back up. And, I think you're going to see the same thing in the US. And, we talked a bit about the rates for borrowing on Bitcoin and the sovereign curve, and I'll just get back to that. You know, I do think the rates that we'll be able to offer over time will go down. But more importantly, I think interest rates generally have been massively suppressed by this money printing. And when that ability gets restricted, I think we'll see interest rates go up to more normalized levels. I think we lived through this period that is really unprecedented in terms of where interest rates were, and the value of money, kind of time value of money. If you just keep interest rates of normal, like absurdly low, it leads to all kinds of poor investment decisions because people don't have this hurdle that they need to achieve in order to get a return. So I think it's all tied together, and it's complicated. And the real solution is balancing the budget. And I don't see really any developed world where that's even being discussed. And so, it's just more of the same. And yeah, I don't know when it's going to happen, but when I see these types of market volatility, like we're seeing in Bitcoin's price today, it definitely leads me to believe that you know somebody's impaired. Somebody's been selling a lot of Bitcoin clearly, and eventually we'll find out who it was. In the meantime, it's all rumors and guessing. But you know, I'll kind of go into the tie it back to kind of counterparty risk, because people talk a lot about this 4-year cycle, and to me, when I look at the massive price drops in Bitcoin, it's Mt. Gox failing, and the failures in 2021, 2022 that led to a huge market sell-off. And to me, the risks within Bitcoin itself are really a result of this type of centralization. And if you saw a big custodial failure or an exchange failure, that would I think greatly things that go to the confidence of the Bitcoin ecosystem itself, when all TradFi world can point and say, see, I saw that was a scam the whole time. Um, to me, though, that's the real risk of Bitcoin, is these, you know, big holders of Bitcoin, um, where it's unverified financial audits, a bunch of other things.
Mhm. So you are basically saying that the accumulation of bitcoins in the hands of a few, and how they could influence the market is still like pretty much a danger, or it has a very big influence on the market in general at the moment. But like, for example, services like yours with Cadena, I think it's moving towards kind of helping people to actually like enter the space with like a smaller amount of like Bitcoin holding as well. And now with like the big players entering the market too, it's kind of like incentivizing the normies too to at least like diversify their portfolio, or like look into the digital gold, let's just say.
Yeah, I think there's a lot of I think we're so early in it still. Like, with investment advisors, I think at the beginning of the year you saw, some US banks kind of indicate a small percentage to crypto would make sense. Um, when you actually add an asset with Bitcoin's, risk and reward characteristics to a portfolio of stocks and bonds, the percentage you would allocate based on optimizing for the numbers is much higher than 2 to 4% for any of those portfolios. And that would even be like of the safest portfolios. And so there's a lot of room for growth on that side, I think. I'm pretty confident.
Do you think that like this type of financing, like where you have like your bitcoins in self custody, is it realistically scalable? Or
Yeah, I think it is scalable, and to me, this is kind of the key point. Is you know again, I think the centralization versus decentralization issue is the key thing, and so we're using the centralized world as it exists today is essentially TradFi spread lending business, borrowing money and then lending it to people who and using their Bitcoin as collateral. And so there's paperwork involved, KYC, all this other stuff. But as long as you can liquidate your clients before the price falls, you have a viable business if you can do the paperwork cheaply. Our business is decentralized and uses technology. And so, like anything that's decentralized, it's a bit more robust, a bit more scalable than having these centralized solutions that depend on manual processes. And so this is a technology solution to borrowing and lending in Bitcoin as opposed to a paper-based solution. So I think it's infinitely more scalable.
yeah, but is it user friendly? That's the question, because you said that you want
Well,
your
yeah, and
18
so
year
this
old.
is this is the challenge, Barbara. This is what I get to spend days and nights worrying about and talking to users about is how to make it friendlier and easier to use and easier to understand. And I think this has been and probably will always be the biggest challenge, for us. And I think you know talking to enough clients, talking to the miners, for example, who their clients need to borrow $6,422 to buy a mining rig. So if we can offer them a $6,000 loan or a $7,000 loan, that kind of makes sense with what they're looking for, as opposed to a zero point 0.1 Bitcoin loan or something else. So I think this is going to be a bit of an unlock and make it much easier for people to use the platform. And then, there's all kinds of explainers and things that have to happen to make the user experience smooth. And for me, when we put out the product in early November, it was, we've been working really on the technology piece almost exclusively. And now it was like, okay, well now how do we sell this to users? And there's definitely interest from, I went to Adopting Bitcoin conference in November in El Salvador, and there's interest from everybody, from the people selling real estate to the miners looking to finance their mining equipment to any consumer business looking to be able to offer financing. And so, I'm very convinced that the demand is there, but sometimes we need to smooth around the edges, and I think we're doing a pretty good job doing that now, and it'll be implemented soon.
I mean, still early in your product's journey, but like you said that the developed nations are slower in adoption. Do you see most of your users or most of your customers come from developing nations?
It's a good question. So a lot of times, so we're talking with partnerships with exchanges too, and so we are talking to some in developed and developing nations. I think for me, the big opportunity is in developing nations. And so when I moved to Costa Rica, it became very apparent to me very quickly that the people here are just as hardworking, just as smart, and just as, you know, honest as the people in Canada. But we look at, a lot of people in developed worlds, there's kind of rich and poor countries would be maybe a different way to say that. And to me, it's really clear that if you don't have a banking sector and you can't borrow money to start a business or buy a car or buy a house, that the people in those countries are going to be poor. I think that, and so that's what's happening is as soon as we're able to offer these financial services to people who haven't had access to it, and in Costa Rica, the bank serves multiple purposes. You're renewing your driver's license and other things. And if you ever have to go to the bank, you're sitting there for 3 hours to do the most basic transaction. And so, like banking, even in El Salvador, it's often inaccessible for most people. But if we're able to build a banking system with Bitcoin as the foundation, and people can borrow and lend and access financial services in a technologically efficient way, as opposed to sitting in a chair and waiting 3 hours for the banker to tell them to come back the next day with more paper, I think it's going to unlock a massive kind of shift in human productivity that I think few people can even imagine. I mean, there's 2 billion unbanked people in the world, and simply giving them access to the financial system that we all take for granted is going to be incredibly helpful in terms of human evolution.
You know what? I think that's where kind of like the developed nations will have their disadvantages because it doesn't hurt enough for us to be quicker in the adoption. So,
I think
for
that's
example,
interesting. I think
for
that's really interesting because when you talk to people like, if some people in Africa who there's a big Web3 community there and they really understand the technology. And then you're talking to people who are, 25 years old and, I think in North America, some people are on the fence. Okay, well, how corrupt is government? They don't have any doubt how corrupt their governments are. They know they're corrupt to the core and they're printing money at, 30, 40% a year. And they've had that since they were born. And so the use case of Bitcoin is, kind of very, very clear to them. They're tech savvy. And, in some ways I look at Africa in terms of like landlines and cell phones, and they skipped the landlines entirely and went to cell phones. And essentially, I think the same thing's going to happen to financial services, where they're going to skip the whole banking and move straight to some type of digital economy, hopefully based on Bitcoin. And uh, yeah, it's a lot of opportunities in the developed world for sure, developing world. But I think in the developed world, I would describe it as a frog sitting in a pot of water, right? Like, they're going to run inflation to the point where people can tolerate it a bit and still eat, and but it's not something that's going to go away. And eventually, uh, the frog tries to jump out of the water, and that is to Bitcoin. That's the only place. And once you understand, like, you're looking at these government currencies, and I traded currencies for 15 years, sold currency derivatives, but it's really a number of really bad alternatives. And the question is how bad, right? And so, you know, okay, well, in Venezuela and Argentina, they got a bit, ahead of the money printer. Uh, you know, they kind of went that way before maybe Canada and the United States, which were maybe managed a bit better economically at the time. But I don't think that's the case anymore, where they're being managed, significantly better economically. And I think people see this, and I think they feel it, right? I think there's a lot of anxiety in the world, and it's really as a result of, geez, I can't plan anything because I don't know if this $100 bill is going to be able to buy me a loaf of bread in 3 years. And that's stressful for people. So when you take away that issue by fixing the money, people can do all kinds of other things with their time. They don't need to spend, all this time working with a tax advisor and investment advisor about how to, you know, avoid this fiat debasement and the government taking all their money.
so how come is it Bitcoin only? I mean, have you thought about like bringing your product to other chains as well, or?
Well, I think in the fiat world, like, there's definitely interest in connecting fiat on and off ramps and stable coins. In terms of other cryptocurrencies, I guess I don't see the point at this time. Bitcoin is to avoid decentralization, have fixed supply, and there's some very specific properties of Bitcoin that make it, uh, you know, better as money than a lot of the fiat currencies, and I'm not sure that with some of the other cryptocurrencies. And I'll say this as somebody who came to Bitcoin recently, I'm definitely interested in learning everything I can from the cryptocurrency space and other things. But for me, the security, the fixed supply, um, are really key features of Bitcoin that separate itself from everything else.
Okay, so it's for now it's gonna be Bitcoin only. I'm just asking because most of our like viewers are Bitcoin maxis. I'm not sure if
Yeah,
you're familiar with the
yeah,
term.
yeah, absolutely. I would say I'm more of a freedom maxi than a Bitcoin maxi, but they're they're closely aligned. I just, it's interesting to see I think what's interesting to me about the cryptocurrency side is sometimes there are some innovations happening in that space, and it is interesting to see how people interact and use it. I also think there's a tremendous amount of scams and just complete nonsense going on in that space too.
That's for sure. That's for sure. Like, but yeah, I mean everything like comes back to like there is like crypto life cycle. Let's just say when you first enter crypto, it's usually Bitcoin, and then you buy Bitcoin, and then you buy shit coins, and then you buy other altcoins, and then you go back to Bitcoin, and you arrive back to the same position that you are only buying Bitcoin most of the time. This
Yeah,
is
Bitcoin only,
this
or
is
you're
the
doing it wrong.
yeah.
Um,
So, like, how do you see does the financial system look Bitcoin native in 10 years' time? What do you think?
yeah, I think so. In 10 years, I think so. At least 50-50. I think we reach a point of kind of mass adoption where early adopters make up, I don't know, 5 to 15% of the market, and then it moves pretty quickly. I don't think, Blockbuster Video or Netflix was asking permission and really worried about Blockbuster Video and what they were doing. And that's how I feel about the banking sector. It is complete. Like I worked in banking for 20 years, and I look at it as like spreadsheets with made up numbers about made up money. It doesn't make any sense. None of it. None of it.
Okay, so now that we go back to your past working or like working in banking for 20 years, is borrowing against Bitcoin real financial sovereignty or just leverage culture repackaged? What do you think?
That's a good question. No, I really do think there are some important reasons for people to borrow against Bitcoin. I would go back to this example of like, if you had a farm back in the day, you had to sell off a corner of your farm to buy seeds to plant. And when you could borrow, you could get the seeds and plant the seeds and have a crop and then sell the crop and pay back the loan. And so credit is an important piece of the economy. Credit can certainly be abused, um, but I don't, I believe in giving people choices and letting those people make their choices. And some people will lever themselves and lose money in a market correction. And that's just the way the free market is.
Is there anything that we haven't talked about that you think would be important for our viewers to know?
No, I would just say check out Cadena Bitcoin. Follow us at Cadena Bitcoin on Twitter. And yeah, looking forward to the new release. And if anybody has any questions, I'm always available.
Well, thank you so much, Kevin, for the conversation. I actually appreciate that you are building products on Bitcoin, especially products like this, because, for example, for some Bitcoiners like me, we don't like to sell our coins, and especially if someone wants to tax optimize their spending, it's always easier to borrow against your assets than to sell them. So, thank you for kind of like enabling us to do that, and hopefully there will be like a longer term product as well, or like a multiple year product as well, so I can buy a house.
Yeah. No, there's a lot coming. There's a lot coming, I promise you.
Well, I will keep an eye on your product, and if that's in, I will be definitely try your services, and we will have you back, I think, on the podcast after
Yeah,
I have my experience with Cadena, and then you can have a live feedback.
sounds good. I look forward to it.